The popularity of Tesla's stock has increased due in large part to the profits that Cathie Woods and ARK Invest, the company's CEO, made as early investors. Cathie Woods is well known for her flamboyant stock investments, and she has been a strong proponent of Tesla since the company's founding. She has stated that she will fully invest in Tesla's stock in 2022. Although Wood's company, ARK Investments, has been selling off some of its more than 250,000 Tesla shares, she remains a strong supporter of the company and believes that its stock will reach $3,000 by 2025 after it sells 20 million cars in just 5 years. Today, we'll examine the reasons behind her increased bet on Tesla stocks. What does Wood's forecast indicate for the future of the auto industry? Let us investigate Cathie Wood. After her innovative ARK Investment Management delivered exceptional results in 2020, the founder, CEO, and Chief Investment Officer of ARK Investment Management has made a name for herself in the F industry. Cathie Wood is no stranger to placing large bets on Tesla. She recently spoke about the tech sell-off in innovative stocks in an interview. As usual, she also touched on fiscal policy, monetary policy, the economy, market signals, economic indicators, and innovation. Before we get into Cathie Wood's predictions for the future, let's speak about Tesla stock for a little while. Cathie Wood intends to put her own money in Tesla. We'll find out why she does so later. Tesla's stock is now trading at $10.2996. The company's shares dropped 10.57% during the first week of 2022, which was quite difficult. Some of the most exciting news for Tesla stock is that the company's Austin Gigafactory may be opening soon, and the Model Y is expected to start being manufactured within the next 7 to 10 days. Before mass manufacturing and customer delivery, the company has tested a few vehicles and is determining whether they meet their standards. One important feature of the Austin model that will be released is that it will have 4680 batteries, which are essential for Tesla cars because they offer a longer range, can be charged more quickly, and are less expensive for Tesla to produce. It is imperative that Tesla start using these 4680 batteries. As the Tesla Giga Austin and Model Y were being constructed, another bit of information that surfaced was when Elon Musk tweeted that Tesla will be doubling the price it charges for customers who desire fully autonomous features for their cars, going from $10,000 to $12,000. Tesla has seen a number of people purchase the full self-driving functionality for less than $10,000, and the company continues to advance its software, increasing expenses as it gets closer to fully self-driving. Now let's go back to Cathie Wood and what she said about why she went all in and effectively spent the majority of her net worth in her approach. As we all know, most of her initiatives are geared toward disruptive innovation. These equities have been hammered over several months. They're down more than 50 to 75%. Elon Musk discussed in a recent interview how full self-driving level 4 might potentially be achieved in 2022. When that happens, we anticipate Tesla to raise its costs. She stressed that the companies she has invested in are actually in a highly valued zone right now, where investors can buy them at a very favorable price point. She expects to make up to 40% in 2022, which is a huge return compared to the previous year. However, there is still uncertainty surrounding the overall stock market because of the federal government. You can bet that they will likely spike rates sooner than expected, so that will be one of the most important things to keep an eye on for the Tesla and ARK stock markets. We adore ARK because they have a strong belief in Tesla. They were the ones who started acting really aggressively toward Tesla before other people did. She has made significant investments in her techniques since, over the last 5 years, ARK Invest has produced fantastic long-term returns, and she has made more than 200% on her design. She invests her net worth in her strategies and innovative creative enterprises, in addition to the money she receives from investors. It's evident from looking at the ARK Invest strategies that they make investments in cryptocurrency and 3D printing. In her most recent reports, they also had many ETFs. Cathie Woods predicts that as big manufacturers lost market share, GM and Ford would suffer with their profit margins. In an effort to make a comeback after her funds underperformed in the market the previous year, ARK Invest doubled down on some of her favorite growing companies as she started 2022. Her portfolio increased in 2020 as a result of innovative acquisitions she made, such as a Tesla. Despite Wood's conviction that the epidemic is spurring innovation, the ARK Innovation F is trading down 21 in 2021 after achieving an impressive 153 return in 2020. According to her investor webcast, she is dubious about the current rise in traditional manufacturers like Ford and General Motors. They are up 18 and 6% year to date, respectively, far exceeding Tesla's 3% loss. This is a continuation of 2021 patterns, with Ford jumping to 137%, as opposed to Tesla's 50% surge in Ford stock last year, achieved a 20-year high following the company's announcement that it planned to increase the number of electric F-150 vehicles to 150,000 by 2023. General Motors' stock price increased when it unveiled an electrified variant of its best-selling pickup truck. Just 2% of their sales are electric Silverettos, and she questioned whether the remaining 98% would eventually become obsolete as consumer demand shifts toward electric vehicles. According to her, rising used car inventories and the improvement in the scarcity of microchips show that the ongoing decline in sales of new cars isn't solely due to supply problems. She also said that the announcements of electric vehicles are absurd. Wood continued by stating that just 2% of traditional automaker sales are made up of electric vehicles, with gas-powered cars making up the majority. Wood thinks that companies like Tesla and electric vehicle manufacturers are superior to traditional automakers. For instance, companies like Ford or General Motors may record an unexpected loss by 2023 as a result of increased investment in the switch to electric vehicles and a decline in the market for gas-powered vehicles. While GM and Ford stocks rose last year as investors recognized their efforts to shift to electric vehicles, Wood believes that conventional OEMs were too little, too late, and that electric cars will continue to eat into the market share of gas-powered machines. The production of electric vehicles is not something that the established players are accustomed to, since they were born during the industrial era of gas power. She added that Tesla is expected to sell about 20 million cars by 2025, and that it will hold a 25% market share in the global auto industry in 3 to 5 years. However, Cathie Wood justified her prediction by pointing out that, according to her firm's prior data, Tesla already holds a 60% market share in the US and a 20% market share abroad for electric vehicles. Tesla sold slightly less than 1 million cars last year. While Wood anticipated that Tesla's market share would decline as more electric vehicles hit the market, to ARK's surprise, the company's share of global sales of electric vehicles is either stable or increasing, giving ARK even more reason to be optimistic about the company. In contrast, GM sales fell to 44,697 units in the third quarter of 2021, down 218,195 units from the previous year. They are blaming this decline on disruptions in the semiconductor supply chain, even though Tesla's sales are rising every quarter, indicating that consumers are demanding higher quality products from General Motors. The company is currently offering the wrong products. It's crucial to keep in mind that electric vehicles require 10 times more chips than vehicles powered by internal combustion engines. The two largest automakers in the world are Volkswagen and Toyota, both of which produce roughly 10 million vehicles annually under a single umbrella brand. If Wood is right, Tesla will thus overtake the German and Japanese behemoths in market share, though Wood's projection excites Tesla fans and investors. Tesla has indicated that by 2030, it wants to produce 20 million cars annually. There is no denying Tesla's importance as an automobile manufacturer. Undoubtedly, Tesla's impact caused several established automakers to reconsider electrification as a possible avenue for expansion and development. One of the motivations is to reduce expenses on gasoline, since the price of petroleum has reached an unprecedented level. Mentioning a few examples doesn't seem to do Tesla credit, as the company has converted countless individuals to electric powertrains. The company introduces new models every year, which contributes to its sales growth. New innovations and increased public knowledge of the advantages of owning an electric vehicle. Do you believe Tesla can sell 20 million cars by 2030? please leave a comment below.